Good day, investors. Today we are taking a look at my personal portfolio of stocks, and I'm going to give you the short rationale why I own them. But first, you have this meme from X. I think it's really fitting the theme. You have the safe jurisdiction version, pays 20 times free cash flow because that's safe. So this is buying an ExxonMobil. Or you get the African cowboy approach, which is you pay 2 times free cash flow because he's not dumb. And I would be somewhere between the two, but more tilted to the valuation side of the story. Okay, so let's jump into it. You can see Petrobras is by far my largest holding, 41%, followed by Equinor, Canadian Natural, Ambev, Arc Resources, BAT, and Vår Energi. So first, this portfolio changed a lot over the last year, except the Petrobras portion. I had, I think, 35-40% of BAT, but since it had such a nice run, I sold it off in pieces, and dollar cost averaged into Petrobras, and also bought other items. So that changed because I had a really good ride with BAT. All right, so looking at more into the details on the why, let's look at each of them. You got Petrobras, 11.55 is my average price, and the current it's below current price. I think the discount, I think the intrinsic value is around 32, so that's 150 upside. So it's really cheap on all metrics. You look at it, it's cheap. It has a return on equity. These are 7-year averages of 32%, return on tangible assets 12%. So this is a strong company. Debt is 35% and coverage ratio is 15. So balance sheet is good, profitability is really good, and the company is cheap. Of course, there is a qualitative risk there because it's basically Brazilian state-owned enterprise. They control 51% of the voting shares. They had issues in the past of, let's say, you can just look up the car wash scandal. I think they changed a lot on their governance. They had 2016 bylaws. Of course, those are not really unchangeable. So Lula changed, let's say, technically a CEO couldn't be a government guy who was affiliated with any parties in the past 2 years. They changed that to 2 months from 2 years, and they put in a new guy as a CEO. So that changed, but it's still much better than it used to be. So I think the political risk is offset by the quality of the business and the price. Followed by Equinor. So Equinor is in Norway. So this is Brazil. This is Norway. Norwegian state-owned enterprise. I think 67% of the company is owned by the Norwegian government. I paid an average price just above 22. It's now 25. And I think the discounted free cash flow is 37. So that's a 46% upside. It has really good profitability numbers. Its debt to equity is a bit higher because it's in Norway. They have a 78% tax. There are deductions, but a really high tax regime. So it makes sense for them to lever up to get the tax shield, and then their coverage is 50. So this balance sheet is even stronger than Petrobras because they can cover their interest cost 50 times. So this is a really solid business. They are basically, so I didn't say that, but Petrobras is 80% oil, 20 gas. Equinor is like 50-50. And then they have piped gas access to Europe. So that's also a strategic story with this. So, and then they are a really low cost producer. So I think this is a really high quality business, both of them. And both of them are state owned. So you have risk around that. But of course, Norwegian is less risky than a Brazilian company. Third one, Canadian Natural. So the clear story here is, first of all, average price I played below 44. Today is 48. I think the value is around 55. So there is a 15% upside. Return on equity, 21%, pretty good. Return on tangible, pretty good. Debt is manageable, so not as pristine as even an Equinor or a Petrobras is looking better, but it's easily manageable, so that's not an issue. I think the story with Canadian Natural is it's 60% oil for, when I say oil, it's just oil plus liquid, so it's basically liquids, 60% liquids, 40% natural gas. But they have so long reserve life on those assets because they are heavy on oil sands. So their reserve life is like 40 years or something. It's insanely long. They don't have to worry about that. Of course, if you talk about Canadian oil and gas companies, I'll say the same for ARC, is that they get a opportunity to unlock their natural gas. And just today or yesterday, the Canadian Prime Minister stated that Canada's gonna produce 50 million tons of LNG or something and export it to Asian markets. So why is that a big case? So I think the business case investment thesis behind Canadian natural gas is that in Europe you can sell it for 10, in the US you can sell it for 4, and in Canada you can sell it for 2.5. So there's an arbitrage basically selling natural gas anywhere else but Canada. And they just have to get the infrastructure really in place, and they're doing that. And have the political will to do that. I think the Venezuela situation really kicked them in the right direction, that like, okay, we have to diversify and push, and maybe we can see unlocking Canadian energy, especially natural gas, to the world. So that then these values would shut up if that would happen. Fourth, I got Ambev. So this is a Brazilian alcoholic and beverage company. So it's not just alcoholic, there are non-alcoholic parts. The largest part of the business is like 40-something% Brazilian beer. But you have they have a Canadian business, they have other businesses in Latin America, they sell they license Pepsi products and those kind of things. And this is basically a subsidiary, so the majority owner is Anheuser-Busch. That's the story. So what's my average price is 262 is the price now, so I'm up. Discounted free cash flow value I think is just around $3. Okay, so the upside is not as good anymore, 12%, and my upside is always 10% free cash flow yield discounted. So that's my fair value assumption. But if you look at the business, you have a return on equity of 21%, return on tangible asset of 20%, and then you have basically no debt and easy coverage. So this is a no debt cash machine. So this is like a cheaper Coca-Cola, I would say. Of course, Coca-Cola is a really strong brand, but they are not bad. They are pretty good on that front, and it was a cheaper alternative than buying, let's say, a US company like this. Fifth one, ARC Resources. My average is 25 Canadian. The price is a bit below that, so I'm on the red. Discounted free cash flow, I think, is like 36 Canadian dollars. Their upside, therefore, is like 50%. Okay, looking at profitability, they are a bit below the others, but I'm gonna tell you why that doesn't really count that much. They are 60% natural gas and 40 liquids. And of that 40, they have a lot of condensate, which is actually in shortage in Canada. They need it. So they have a good production mix. And natural gas had worse past returns compared to oil. So if you compare, let's say, 100% oil company in Canada, they had much better returns on their equity than a 100% natural gas company in Canada. But that's the past. So these are historical numbers. If you look forward, if they can unlock their natural gas potential, get that arbitrage goes, so if they can get the arbitrage of gas and maybe global prices converge, then these gas players can be more profitable than the oil companies. So that's your story. Past profitability is not the future. So my story is this for natural gas. And then if you look at their debt, it's manageable, and of course coverage. So balance sheet is fine, financials are fine, and I want to highlight their management is really good. I think you can, I found it a couple months ago. You can find it as well. Interviews with the CEO on podcasts. I think like a couple hundred people watch those videos. So it's not even that well watched, like widely watched. But the CEO is really nice. It's a Canadian, basically farm boy who was an engineer and worked himself up. And then it's a really nice story. So, and overall management looks really solid for ARC, so that's a plus. And I think this is the top pick also for Rick Rule, so that was nice to get a confirmation from him on that. Sixth one, BAT. So I used to have BAT as like 40% of my stock portfolio. My average price is I'm like 26 pounds, and today it's 43. So I'm up huge. The discounted free cash is 47, so I technically still have an upside in it. But my thesis is that I just bought it really cheap, and I'm gonna hold on to it. Of course, I sold a lot because look, I'm like 6%. I used to be 40. Of course, the portfolio grew, and I didn't buy more BAT, and I also sold BAT because I wanted to buy other stuff. Plus, wanted to make my taxes more efficient. But BAT is a really solid business overall, so you have a return on equity of 15%, which doesn't really matter for BAT. What matters for a company like BAT, and actually for Ambev, is their return on tangible assets, because they have a lot of goodwill, and that is insane. So this is one of the most profitable companies you'll find. Debt to equity, less meaningful. If you look at an Altria or a Philip Morris, they have negative equity because they just wash away the goodwill, and then they have nothing to offset it, right? There is no goodwill asset to offset the liabilities. What really matters here is coverage ratio, and 7, so it's on the lower end, but given B8 is business, it's a more stable cash business, right? You can operate with less current ratio and lower coverage ratio. And finally, my newest additions, I actually just recently started buying it, Vår Energi. This is, I think, 70% or maybe 80% owned by Eni, the Italian energy company, and it's in Norway. The average price I paid is 285 euros. On my summary, I got it in Norwegian krone, but here I just translated how I see on my broker. So, and that's just below today's price at 3 euros, and I think the value is like 88 Norwegian krone or 7.5 euros. So you have a massive 150 upside, basically a Petrobras valuation. Now, if you look at the return equity, it's like 112%. But why? How is that possible? The rationale is their debt to equity is 700 times, 700%. So what that means? Well, if you look at their balance sheet, you will see a lot of tax liabilities, and then they don't have much retained earnings because they just pay massive dividends to the owner of basically to Eni. What matters is the return on tangible assets. That's decent. That's like an Equinor level profitability, basically. This is misstated. And if you look at just coverage ratio, you see they can cover their interest cost 17 times. And they have a metric in their financials of how many times they can basically net debt versus their EBITDA, which is like 0.9. So they could technically pay off their debt really easily. So they are not dying as this debt to equity would suggest. Their coverage is fine and their cash flows are fine. They are projecting nice growth and they are extremely cheap. So that's basically a Petrobras cheapness in Norway. So that's the idea of owning Vår Energi. So that said, this would be wrapping up my portfolio. I'm really concentrated. Actually, I'm more diversified now than probably ever. I'm just usually liking to hold max 4 stocks. But I found too many nice stocks to add. That said, I've recently received so many feedback about publishing Excel data sheets and my materials that I decided to do it for members. I got a couple members, and I've always felt bad that, like, okay, you subscribe, but I'm not providing you anything extra value. Now, I realized that I could do is that I'm gonna share the files with them. I'm gonna provide a snapshot every week of my, well, the core idea is my portfolio update, all the summary tables. So what I put in the videos is less what I put there. That's just a small part. So my portfolio, my summary tables, my economic assumptions, which would be like, say, FX, commodity prices, and changes. So what new videos we covered, any big changes made to the economic assumptions, and any big changes to the thesis happening over time. So if something happens, let's say I have to cut my Petrobras, hopefully not, I'll probably say it in a video, but in those weekly reports, I'm gonna keep everybody posted if something major happens, and they're gonna see also it in the file, on the portfolio allocation. So that's all. Thanks a lot for watching, and I'll see you next time. Take care.